Good morning and welcome back to KTN Morning Express. I'm Michael Karanja. Now, cash, plastic or mobile payments. Now, that is a question that we're going to be trying to decipher this morning as we talk about the growth of payment channels in Kenya. And I'm glad to be joined by Njau, who's the head of payment channels at KCB, and Wainaina, who's the vice president and area business leader for MasterCard East Africa. Gentlemen, welcome.
Thank you.
We've always gone by the fact that cash is king. Does that statement still hold fact?
Absolutely. That statement still holds true. The whole conversation is, however, then what form does that cash take? Yeah. It could be in the paper format, it could be in the card format, it could be also in the mobile format. And I think what we're seeing is a shift. It's the beginning of a shift that then moves from the traditional way we've always looked at cash in terms of notes and coins to electronic value, and that is actually cashless. And I think this is driven largely by even trade across border. If you look at Kenya and Kenyans and how they're trading today, they will buy stuff from across the globe, and I don't even need to physically go to where I'm buying stuff from, but then I can send my value across to the other side. If you look at even our own demographics locally here, I have some parents up country that I need to send money to, and I don't need to make the physical movement, and therefore then we are seeing that then yes, cash remains king, but then the format it takes, I think, is moving towards a cashless style and an electronic format of that money.
James, if you just look at it, government has been a key proponent actually for getting away from cashless payments in the way that they handle payments done in government circles. Then that said, then how then do you look at how payments are made in this country?
Thank you. So statistically, 97% of payments in Kenya are made in cash form. I think we applaud at MasterCard the government's vision for digitizing payments and basically their whole wider spectrum of digital agenda incorporating payments. So we are in an interesting situation where we have both private sector and public sector seeing the immense opportunity of digitizing the economy, especially from a payments perspective. Two key themes come into the fray. One, efficiency. And Dennis touched on that a little earlier. When you have digitized payments, they are much more efficient. You do not need to be present for the transaction to hold. There's a lot of expense that relates to the administration, the management, the logistics, the security in terms of handling cash. So digitizing things basically means that you can almost transact in an endless, open-ended sphere. The other element, of course, is transparency. Digitized transactions have an audit trail. So there are a whole load of efficiencies that you can create, and I'm sure that would be one of the government's key motivators in terms of ensuring then that there is efficiency and an audit trail around everything that they're able to collect from citizenry.
Just stick with you. Obviously, you on the card side of payments, so with MasterCard, but just looking at a specific market like Kenya, where mobile money has become an overnight success, okay, not truly overnight, but 7 years of gradual movement to where we are more inclined to do mobile payments as opposed to card payments. Just looking at the numbers, almost 6.5 billion shillings moved daily via mobile money compared to 4.4 billion shillings on card payments. Just looking at that, does that pose a threat, or is it something that complements the way payments are done?
Excellent point. I think Kenya is a global poster child for mobile money, and that is obviously very exciting because it demonstrates the upside opportunity that digitized payments of that nature provide. Our belief is that it's a form factor issue. Basically, different transaction types will be facilitated by a different user experience. I think if you look at the statistics, I think to your point, the growth statistics on the card side have also, in terms of card volumes, have also been extremely steady. With a blip last year. Our own view is that a lot of that has to do with the EMV migration scenario, where because of the adoption of this new EMV standard, there were a whole load of learnings that the market went through, both on the seller side with the POS machine, on the cardholder side with customers now changing from a mag stripe to an EMV card. I think what you're going to continue to see, though, is that trajectory moving up, and especially because there are new interventions. I think the one that MasterCard has really been driving in this market is contactless. Most of the MasterCards issued in this marketplace, and we have significant share already, are contactless. And working with partners such as Kenya Commercial Bank and Equity Bank as well, the rollout of contactless acceptance or contactless terminals at especially retail points is already well in gear.
Yeah.
So into the second half, you're going to see that happening. But I think a broader point, stepping back, that is still 3% of the total payments landscape, and I think that's where inroads need to be made. Our view is that because the lower value transactions have not really come into the electronification space, that's the nut that requires to be cracked. And what we're seeing now is we're seeing for the first time consumers in this market doing 30, 40, 50 shilling transactions using their cards on a contactless basis. Primarily the use case right now is the NTSA mandated, so it's the use of these payment tools in matatus, and it's picking up momentum. And what our expectation is that's going to spill over into other segments as well. So from an upside perspective, I think there's huge momentum. Will one win over the other? I wouldn't adopt a silver bullet approach. I would probably talk of silver buckshot. So it's really the consumer who is going to see how
consumer driven.
It's going to be consumer driven.
There is just looking at that, obviously 3% is just on cards and mobile. Does that then dictate kind of the partnerships that we've seen KCB make in the past? I mean, you've done in banking, now you've even gone bigger and better with the partnership with Safaricom in terms of the KCB and Pesa account. Just looking at that, is that where you try, the way banks now are trying to see where they can get more involved and actually have higher transactions, movements?
I think partnerships is definitely the direction to go. Well, I think yesterday's fiercest of rivals are likely going to be tomorrow's greatest of partners. And it's a question of then how do we come together for the good of that particular customer? Yeah. How do we come together and create value for that particular customer as opposed to just purely competing against each other? And if you look at what happened between ourselves and the Safaricom on the KCB M-Pesa, it was the same conversation. That then there's a whole base that has been transacting in this format. How do we then create value to how it is that they are transacting and create an account that makes it possible for them to actually open that account without even coming to the bank at all? And I think the conversation of convenience is one that will be taking center stage even in the days to come. And it's just been interesting just to see the response over the last few days that account has actually been operational. And still back to James's point in terms of then that whole convenience aspect, that fact that then today I can actually open an account without even seeing the inside of a bank. I can actually transact without even seeing the inside of a bank. I'm actually getting credit without even needing to come to a bank. And it is actually what he's talking about then, the transactions that are not, I don't need to be present on site for those particular transactions to actually happen. And I think we will be seeing a whole lot more of that particular conversation. We definitely do expect to see a lot of inroads as far as mobile money transfers is concerned. And again, to James, it's a question of choice to the customer. Which of this really, both options are available. Whichever the form factor that you want to drive in, then it is actually available to you. And if you look at it even from a government perspective, again, it is also taking the same direction. And I think what we are seeing is all the pieces coming together towards a huge takeoff from a cashless perspective.
This brings in that question, because for a very long time people have been perceptive about making card payments because of the risk element. Now we're seeing banks going to a place where you don't even have to see anyone to have an account, to have a loan, to make payments, to withdraw money, to send money. The element of risk, how are banks factoring this in going forward?
If you look at there's a fundamental shift in how we will do trade. And one of the things that I can tell you, Mike, is that how we did trade yesterday is not necessarily how we're going to do it today, neither is it how we're going to do it tomorrow. If you look at the generation that we are serving today, the Gen Y, bulk of it being even below the age of 35, it's actually a very, very digital age. And the question, I think the big question for us has been, what are the necessary integrations that we need to do to make it possible for us to serve you without you even having to come to where we are? If you look at today as we open an account, it does not mean that then the fact that we didn't see you, we do not know you. 2 weeks ago, 3 weeks ago, the president was launching the IPRS, which is basically one center of information. In fact, they call it a one source of truth as far as your data is concerned. And we are seeing a lot of secondary data now feeding into the primary data, such as then I don't need to see you to get to know you, because then there are many ways of me getting to know you. If you look at credit, for example, again, you don't need to sit in front of me. I have an integration towards a credit reference bureau that then begins to tell me this is how Michael has performed as far as credit consumption and ability to pay is concerned, and how his discipline also to pay is concerned. Today, Kenyans who have not handled their credit well find themselves listed, and it becomes difficult for us to continue to engage. And therefore, I think in a digital age where technology is available, it is possible for me to achieve the same things I was achieving back then, but in a very, very different way. And therefore, then we've seen ourselves then doing the necessary integrations to be able to then get to the same point. And therefore, it's not that we are taking more risk. It's just that we have managed the how to deal with this risk and how to approach it. James actually just talked about the question of EMV last year, which was definitely a big thing. How then do we still also secure the transaction that you are doing and give you the confidence that you are fine? And I think to James's point, we saw a bit of a dip from a card perspective, but then it was also driven by the fact that then the experiences last year, as all of us, and I would say even KCB was migrating into EMV. It was not without its own few hiccups here and there, and of course that did something as far as the experience is concerned. However, what we have also seen is that then with that result, Kenyans are more confident to use their cards, even much greater. The advent of prepaid cards that has actually gotten into the market then also means that then the risk is not directly to my operational account, but then it's a risk I can now today control, manage, and determine how much exposure I sit with at any point in time. Remember the prepaid conversation.
Interesting you bring up that element of prepaid, because James, if I was just asked to ask you, credit cards is one aspect, but that means it's more or less like a loan where you have your limits depending on how and your ability to pay. But just looking at that, the whole scenario, credit, debit, or prepaid cards, where are you seeing the shift going to? Are more people taking up credit cards? Because not everyone in this population of about 44 million can take up credit cards. So are we looking at more of, in terms of cards, are we looking at more debit cards and prepaid cards going forward?
Thank you. That's a very good question. So when you look at it from a credit card perspective, the credit card is really a function of credit risk that a bank would be willing to take. But the credit card in itself has certain functionality that allows certain benefits, especially if one is traveling. I think what I see is that will always remain a kind of a niche market in that respect. That said, with the onset of the credit reference bureaus and a lot of the innovations that are happening in the banking space, I think the market is going to evolve to a level of higher penetration as far as the credit product is concerned. Currently in Kenya, it's extremely low. The debit card is a card that is associated directly with a bank account. So it's actually providing the customer with access linked directly to the account that they have opened. Whereas the prepaid card is an account in itself. It's a wallet that's incorporated within the card and that sits separately. The benefits of which, if I may talk on the prepaid side, prepaid is a much easier product to deploy. Already there are propositions in the market where you can go to an issuance point, collect your card and begin to start using it immediately. So the usage of the tool is not dependent on an account opening process that would be done in the back office. So prepaid lends itself very much to that. So if you were to look at the whole product set from a very broad kind of perspective, prepaid tends to be an entry-level product, especially for the underserved markets, for the emerging markets like the youth markets, as people evolve and come into this formal financial services space. Debit allows full access of one's entire facilities within a bank account. And of course, credit in fact tends to be the third in the evolution if you look at it very generically. Biggest growth area, I think, is prepaid. And the reason for that comes back down to the figures that I gave. A lot of the reasons around the levels of financial inclusion that have happened are reflective of the 3% figure that I talked to you about. And that's a typical sub-Saharan African kind of scenario. So prepaid lends itself very much into allowing people to be financially included with a product that can be issued to them fairly simply. So if you look at some of the things that MasterCard has done outside of of Kenya, but still within the African continent, like with the Nigerian ID execution. That actually has prepaid functionality. There's something we've just done in Egypt as well that allows us to leverage off the prepaid offerings that we've provided in those markets. So in developing markets, and in a market like Kenya, I can see a huge amount of the share belonging to prepaid. What eventually I think will happen is the banks will take advantage of the relationships that they have with those particular customers from a prepaid perspective and onboard them into deepening the relationship with a broader set of financial products that include debit and credit. So that's the sort of span of things what I see. Just a final point. I think with the more affluent sectors, what you'll find is it will not be unusual for an affluent customer, more affluent customer already ingrained in financial services to have one of each with its own specific function. You may want to do your transactions online, and you want to have a very specific product that you have for that to limit certain risks. That could be either a prepaid card or it could be a debit card. If it's for travel usage, credit tends to lend itself much more for that. If it's because you want to have fuller access to the resources that you have, then you have debit. Again, it's really giving the customer choice along the whole. Absolutely. And I think the one other point I would like to make is the card in itself is just the form that the customer uses. Shortly, there are technologies within MasterCard that will allow the replication of those experiences using different things, using your phone. So you will be able to access your prepaid wallet, initiating it with your phone, your credit wallet, initiating it with your phone, your debit wallet as well, initiating it with your phone. So the reason why the card in its form and function lends itself is because you already have infrastructure that accepts the card.
Interesting you mentioned infrastructure. Now he has the cards, people are swiping for 30, 40 shillings. How are then banks making sure that this point of, say, POSs are available at every single stop? If I tap for my 50 shilling fare, I get off, I want to buy credit or whatever, I'm at a shop, someone has a POS, and how then are you filling in that gap of infrastructure where someone is able to make those payments more seamlessly?
I'll talk about it ourselves from an acquiring perspective, because that's a function that then makes a POS available. Now, what you'll find is that then traditionally we've been in the app market kind of place, and it was easy for you to go into the Nakumats and the Serenas of this world and be able to swipe in there. But with the advent of the fact that then I can swipe at 50 shillings, then it means that then it's not in doubt that then Mama Mboga needs a terminal where my card can be accepted. It is not in doubt that my local butchery needs to have that. And what we will then see, and has already started happening, is the fact that then we're moving away from just the traditional POS as we have known it to a mobile point of sale terminal that then is much cheaper to roll out, and therefore then be able to actually scale it. And what you'll find is that then those will also still have the capability to do an EMV transaction, a full EMV transaction. They'll also be able to have the capability of doing a tap and go transaction. James will mention the fact that then lower value transactions actually run more on a tap and go perspective. And I think it's a big proposition for the card space this year. I think I'll not be surprised that within this year you'll go to a supermarket and it has this dedicated counter that is an express counter where I don't even need to put in my PIN. I just tap and I move on. Pretty much what you'll find even in your parking slots, where then it should be possible for you to just tap in and move out. And therefore what I see us doing, and I will talk about Kenya Commercial Bank as an acquiring bank, is the fact that then we will see ourselves rolling out POS terminals, not just in the traditional space that has been, but then actually we'll find a way of just coming lower down to the market, much lower.
Just as we wind up, perhaps when you look at it in terms of mobile cards, and what do you see the space is? Because I've seen you, I know you were talking earlier and you were telling me there's space for everyone in this market. I mean, that's why everyone is aggressively going after that. So when you just look at it in a long view kind of format, where does the competition move to, and how then do you position yourselves to move that the payments from 3% and actually move on to about 10% and continue making a killing?
I think the question of where we move from here is a question of one, there's a lot of choice being offered. There is mobile banking as we have known it. There is, of course, the telcos and what it is that they're offering. today you'll find MasterCard can actually replicate their card in the form factor of within the mobile space. And I think what that choice does for us is the fact that then it allows us to evolve into that particular space. Government is one of the biggest spenders of any service. Now, when it also says that we want to be paid in a cashless format, then it means that then there's a huge opportunity. And I think that's what I was talking about. We cannot approach this with a scarcity mentality. There is so much. And we've got a role in driving that particular perspective. When James talks about 3%, the question is, how do we then digitize that? Because then it also means that the level of inefficiency and the cost of also doing business is then that much higher within the ecosystem. Because then if you look at, and let me give you an example of the bank. Running a bank, one of the biggest costs is actually the cost of handling cash. All right, and it just makes it extremely expensive. It also speaks to the rest of the business. If you look at one of the conversations we've had before in the transit space, if you think about how much pilferage there is as far as a result of the fact that then we're handling cash, it is huge. And I think opportunity is about being able to see, so these are the gaps that exist today. Who serves them in the greatest way? Who then becomes innovative enough to provide a solution that then that is relevant to all of these traders, and be able to say, we will be able to create more efficiency in terms of how you run your business. We will actually save you much more money in terms of how you're doing your business today, and therefore then drive that. If you look at your average Kenyan today, business thrives much faster when I'm able to then drive the velocity of how money moves from my pocket to your pocket, and reducing then the barriers through which I must go through. And therefore it becomes in the conversation of, as a bank, one of the things that KCB will continue to do is to become very innovative, and it's about being able to provide the solutions that create convenience around you. If you think about yourself, the last time you probably saw the inside of a bank might be quite a while ago. I do not see that changing in the days to come. And it's an interesting question that I've always asked. Even cashiers work in banks. Sometimes I ask them, when was the last time you drew cash out of the till right next to you? And we find a lot of them struggling to remember when was the last time. Because and I think it's just that shift that is going in there. And for us as an organization, it's a recognition of the fact that then it is shifting in that direction. How then do we align ourselves as far as that is concerned? The customer who is down in Bondo does not even want to come to a bank, and that's why you find that the KCB and Pesa kind of a thing, that from his boat, while he's doing his fishing, he can open an account, he can actually get a loan from his phone, and can even repay it while at the comfort of his boat. We are saying, stop. You don't need to stop doing your production in your whatever it is that you do. Keep doing it. Banking should just be as seamless as briefing.
All right, James, obviously, very briefly, Visa looks like it had a head start in the market. How is MasterCard going to find itself in my wallet, like you're telling me?
Thankfully, I'm already in your wallet. And I think, as we discussed earlier, the way I found myself in your wallet, I think, really speaks to our approach. Just to build up from what Dennis was talking about, so we are very digital today. If you look at the levels of phone penetration, look at number of people with email accounts who are, with the mobile money and everything else. So what has lagged, in my view, is the payment space. And I think MasterCard, we are very aware and very conscious of that. And that's where we see a huge opportunity. I think if you look at the pipeline of business that we have lined up, there tends to be a bit of a lead time because of a lot of the technological aspects from an implementation standpoint that need to be taken care of. But basically our role is to help redefine the marketplace. We currently have 13, 14 million cards in the market right now. Our role is actually to double or triple that number and to create a pipeline to do so. That's what it's got to take if we're going to move the 3% to the 10%. We are very committed towards that. We've done it in other markets, and we're going to do that in Kenya as well.
All right, thank you very much.
Thank you.
Those have been my guests, James Wainaina, head of Vice President for MasterCard East Africa, and Njau, who happens to be the head of payment channels at KCB, just talking about where the payment models are going in this country, where it doesn't have to be always that cash is king, but it's about converting that usefulness and make it more convenient for customers to have the choice to actually make payments at their own convenience. We take a short commercial break, but don't go too far. Sophia Wainaina will be back with the person of interest, who is the Principal Secretary in the Ministry of Interior, so don't go too far.